Hello and welcome to Session 14, the last session of Ensuring Success 2021. Thank you so much for sharing 2 days with us. I would be curious to know how many of you have shared 2 days with us. If you'd like to comment on Twitter using the hashtag DecemberCPE and tell us if you've been here for the entire 2 days, we'd love to hear about that. Before we get started with this final session, I'd like to tell you, first of all, how grateful we are to all of our sponsors, and I'm going to tell you really quickly who they all are so that you can also be grateful to them for providing this free event where you can get CPE for no charge. And our sponsors this year include Intuit, Sage, Xero, ADP, Ace Cloud Solutions, CPA Charge, Avalara, BotKeeper, ComplyRight, CorePay One, CoreV, SureLink, TaxFile, CPA.com, eFile for Biz, VicAI, Wolters Kluwer, QX Global, Right Networks, and SafeSend Returns. So thank you to all of our sponsors for making this event possible. Next, I'd like to tell you briefly how to get CPE for this session. So if you've been here all day, 2 days, this is the 14th time you've heard this, and that's I apologize for that, but you've got it down now, I'm sure. During the session, we will provide you with 3 codes, numerical codes. They'll appear at the bottom of your screen. I'll call attention to them to make sure you're looking and can make a record of those numbers. You'll record each of those 3 codes. At the end of the event, you can go to our home screen, ensuringsuccess.com, and at the top of the screen, there's an option that says Get CPE. And when you click on that, you'll enter the email address you used to register for the event, and then you can go down a list of all the sessions and enter all the codes you collected at every session you attended and download your CPE certificates on the spot. I'd like to also take a moment to thank our sponsor, Sage, who is sponsoring this particular session, in case you couldn't tell. And two other things, and that's the end of my housekeeping. First, look for an email from CPA Practice Advisor within the next week. We will be sending you what we're calling a digital tote bag, which includes information, offers, white papers, a lot of good stuff from all of the sponsors that have made this event possible. And the other thing I want to tell you is that especially if you're new to our event today at this point and haven't been here in earlier sessions, if you want to contact us, you can scroll down on the screen under the video box. There's an Ask a Question box that you can click on at any time. If you have any questions, technical issues, questions about how the CPE works, if you'd like to comment or ask a question of any of our speakers, you can do that there. We'll get a live feed here in the room of your questions, so feel free to even just give us little testimonials about what a great job we've been doing for 2 days. We'd love to hear that too.
Yeah.
All right. So at this point, I would like to turn to my guests here in the room and introduce our panel who are going to enjoy this last session with us. We've changed it up a little bit, as you can see with the layout on the table here. But our panel today includes Ed Kless, Shayna Chapman, Garrett Wagner, Jackie Meyer, and my co-moderator, Alexander DeFelice. I'd like you each to go around the table briefly and introduce yourselves.
Sure. I'm Ed Kless, Senior Director, Partner Development and Strategy at Sage, and I live here in Dallas, so it's an easy commute for me.
All right. Shayna.
I'm Shayna Chapman. I'm from Gallup-Lease, Ohio. I'm a CPA, and I own Shayna Co. LLC. And I run the firm is a smaller firm, and so we do a lot of various work. And so thanks for having me, Gail. I appreciate it.
Garrett Wagner, CPA, CITP, CEO and founder of C3 Evolution Group. We provide innovative solutions to today's CPA firms, and subscription pricing is one of the things we help firms get started with.
Hi, I'm Jackie Meyer. I'm CEO of Meyer Tax, Certified Concierge Accountant Coaching Program, and Tax Plan IQ.
And for the 14th time, I'm Alexandra DeFelice, Director of Marketing and Business Development for Payne & Fears Law Firm in Orange County, California, and co-moderating with Gail Perry for the last 2 days and 14 sessions. And actually, Gail...
Not to mention 10 years, but...
Well, yeah, there's that. So before we get started, actually, before this is the biggest panel we've had today, and I think we might, by the time we get done with this wine, we might forget what questions we were asking. So I think we should probably ask the poll question right away, because we wanted to get a gauge for what how the audience was billing. So we have just a quick poll question, which is, how do you currently price? Is it hourly, value price, subscription model, or hybrid? So we'll let you answer that, and I will let you ask your first question.
All right. Well, for any of you who know Ed Kless, you've probably heard him speak about pricing at some point in your relationship or in your experience with him. And the session topic that we have today includes the term subscription pricing and value pricing. It's the subscription pricing, the evolution of the value pricing model, I believe, is the title we gave to this session. So subscription pricing is actually not something that Ed Kless made up.
Are we sure about that, though? Can we maybe
very, very sure
debate
about
that?
There's even a book. Yeah, why don't we start with giving some definitions, what we mean by subscription pricing and value pricing, and any other kind of pricing you would like to talk about.
Well, I'll take that one, Gail. Sure. I think first is let's talk about value-led pricing. Value pricing is a price in which the primary but not sole determining input into the price is the perceived value of the customer. So that's the definition we go with from a value-based price. Subscription, what we are saying for subscription is there's not a definition yet. I mean, which is great because it's starting to evolve, right?
So it is a term you made up.
I didn't make up subscription pricing. Subscription pricing goes back to the 1400s. Map makers originally were the first subscription pricers. You could subscribe to their maps and they would update the maps. So this goes back a long, long way. But it being applied to professional firms is really what I think is a little bit new, although there's been variations on it for years and years and years. But the key for me is that with value-based pricing, what we did is we priced the customer, whereas with subscription pricing, what we're doing is we're pricing the portfolio. So you're creating a risk pool of customers across a group, and you're pricing them across that group. So I think that's one of the key insights to subscription pricing.
Yeah, and a good thing about that journey from billing by the hour to value pricing, that was a big shift. That was a big gap from I'm going to do an hour of time and I'm going to value it some arbitrary number and I'm going to bill it to I'm going to value the customer and offer that. Subscription pricing is a more subtle evolution of the value pricing. There's a lot of overlaps between the two. So if you're doing value pricing, it's an easier transition to subscription because you're already probably understanding the concept. You've moved away from the billable hours already, which is that big hurdle we see all the time of why won't they go to value pricing or subscription? They're still tied to that, I need to bill by the hour. And it's just like, on my deathbed, I will bill by the hour for like how many hours I spent in the hospital and like, here's my bill.
Yeah,
like,
really.
pay me.
Jeez.
Yeah.
All right, let's get a little more in depth into actually what these terms mean in terms of how they work in an accounting practice. So value pricing, let's start there. How does that work? I'm going to turn to Jackie right now because I know she uses that kind of a pricing model.
Yeah. So value pricing is just charging up front for all the tangible and intangible values that you might bring to the table for the client. For me in particular, that's around tax planning, but that can be around a lot of different services. And I've recently joined the AICPA Practice Management Committee, and so I've been a huge advocate with them to talk more about how you can value price with tax planning, because I know a lot of people confuse that with contingent fees, and it's not the same thing.
And Shayna, do you want to add to that?
Yeah, in my firm, we value price basically everything, but we also do CAS services, so we value price those up front and state it in our engagement letters, and we get very into even how many meetings we can have, and we line out our engagement letters very specifically on what they have, and we set the price up front, and so the client already knows what the budget every month, and we know what our income coming in every month is. And so we do that with our accounting services. We do it with tax, but we really do it with the accounting because that's more of a every month situation for us.
But this is very specific to each individual client, right? It's not like okay, we're going to charge $500 for an individual tax return. This much, it's not going to be the same across the board. You have two clients sitting next to each other that seem like they're in the same industry, around the same size, but the complexity and everything else, you can charge them completely different prices, right?
I think so, because No two clients. It's not like I'd like to say, it's not like hamburgers. The hamburgers are all made the same. But accounting work, we can have two clients in the exact same industry, and it's not the same. They're whether it's the accounting side or how it's going to feed into their tax planning, which Jackie could talk about, or how it goes into their personal income tax returns from there. There's a whole lot. Each of these stand on their own. And so for that reason, you have to price the client, not the work. You have to really think about everything that goes into that particular client.
Yeah, so that's kind of the big question at hand is the difference between subscription pricing and value pricing. Is this like custom price versus a fixed fee? And what is better, right?
Yeah, there could be a combination.
Which we'll tell you right after you see the first CPE code.
Okay.
There we go.
Just going to appear on the screen right now. Take note of this code if you plan to collect CPE for this session. Ed, back to you.
All right, well, first let's get the party started. Let's just get this going here.
Let's go for
make
it.
this
It's
happen
fun.
here. All right, now we're going to get into it. Cheers.
Cheers. Subscription pricing.
Yeah,
Cheers
subscription
to Gail and
for an
Alexandra.
excellent ensuring
Yeah.
success again
Yeah.
this year. So thank you. We
Yes,
appreciate
yes.
everything you guys do at
Thank you.
CPA Academy, CPA Practice Advisor as well. Okay,
Hi,
so
Scott.
now we'll talk. Here's the story that I think illustrates what this difference is. I have a friend and colleague at the Versace Institute. His name is Tim Williams. He comes to us from a more marketing and advertising background. And Tim lives in Utah, but has a house that he inherited in Las Vegas. And Tim wanted to have a landscaper for this house because he wanted to put it up on Airbnb. So he visits the property, and what does he do when he wants to hire a landscaper? How many phone calls did he make?
3.
3. He made 3. That's right. He made 3 phone calls. Everything. We're going to get 3. We got 3. Call 3 people. We're going to call 3 people. So the first guy, sorry, ladies, was a guy. They're all guys. No, this is all right.
fine.
All right. So
Okay.
sorry.
Thanks,
This is the first guy shows up, and he's got a clipboard. And he's walking around just looking at the property and says, okay, for about $50 an hour, here's what I'm going to do for you, Tim. I'm going to mow, I'm going to edge, I'm going to cut your bushes back, and I'll send you a bill at the end of the month for the number of hours it takes me to do this on a weekly basis. Okay, great. The next guy shows up, he's got the same clipboard, and he walks the property with Tim, says, listen, this is what I'm going to do. I'm going to give you a fixed price, but what you're going to do, I'm going to mow, I'm going to edge, I'm going to trim your bushes back. Third guy shows up, and he's got the clipboard, but he kind of puts it down and says, Tim, tell me about this property. And says, well, it's a rental, I inherited it, I want to put it up on Airbnb. Guy says, here's what I'm going to do for you. For $300 a month, I'm going to make sure that your house has the best curb appeal in the neighborhood. If a bush dies, I'm going to plant a new one. If the tree is a problem, we're going to fix it. I'm going to mow, I'm going to edge, I'm going to do all that. But this house is going to have the best curb appeal in the neighborhood. I change the flowers out but during different seasons. So Tim asks his audience after he tells the story, which guy do you think I went with? Which landscaper? And everybody says the third one, right? He says, no, the third one doesn't exist. I had to make him up, right? Because that's what I would have bought. Because let's take us through, and this is where it relates back to what you were saying, Garrett. In the first scenario, the guy was charging for his inputs, his hours, and the 3 of you are way past that, which is great. With value pricing, what you're charging is for the output. This is the list of stuff, right? So this is the list of stuff that you're going to get, and that's the outputs. The third thing, the best curb appeal in the neighborhood, is an outcome. And what we're suggesting that with subscription pricing, what you're paying for is an outcome, which is something more nebulous. It's best curb appeal in the neighborhood. It's peace of mind. It's not a list of stuff. It's oftentimes a feeling. It's a relationship. And I think even value-based pricing at its best day did not put the focus as much on the relationship as subscription-based pricing does, because with subscription, you have to constantly be thinking, what can we do to make this more and more valuable to this customer, so that they come back and continue to use us.
And that's
it
where
really
the pivots
changes
of
the
like,
dynamic.
how do we make that outcome focused? How do we make sure they're happy, they're taken care of? Especially with subscription, how do we make it easy? Once again, it's easy for them. It's that peace of mind. Whatever they need, they're covered. It's easy to sign up, easy to get started. And once again, you're as a firm, you're not kind of tracking like how profitable is this one job. I mean, it's just like Netflix. Like they're not tracking, Ed, you're going to pay $26.99. Shayna, you're going to pay $9.99. I'm going to pay $30 a month because my daughter watches way too much. And Jackie, you're going to pay like $10 a month.
Okay.
And they're like monitoring through it and like changing our thing every month. It would drive us crazy. It's just like, hey, you're all going to pay this. And overall, we're making money and profit.
Right. And they don't
what are you
increase the
buying?
price when the new Ozark comes out.
You're
right?
buying that
Is it-
convenience of you can watch whatever you want, whenever you want. So that's what they're buying from us, is that peace of mind. They've got support whenever they need it, on whatever they need it, and you're dealing with those little bumps in the road. It's a very big, from that standpoint, that's that big shift of how you monitor it, think about it from a business standpoint.
Well, tell them what you did with COVID, because this is a great story.
Yeah, so, obviously COVID hit, and we were all kind of struggling with, okay, what do we do? A lot of firms didn't charge for anything. Some firms charged an obscene amount of money for the most simplest task, and they felt great because they made so much money. They charged $1,000, $2,000 for an EIDL application that took them 10 seconds, and they felt good. So we looked at it and we said, listen, this is a perfect example for subscription pricing. They want that peace of mind, that no matter what happens, government programs, future today, we're here for them. So it's very simple. For $250 a month, we're here for them. No matter what happens, whether it's a new process, new forgiveness, new program, we're here from them. Or nothing.
I wish I would have thought of that.
So it was great. It was a 6-month term, because we started in like April 1st, right when it hit. 6-month term. You could cancel any time after that. And most stayed 12 to 18 months. And they loved it, because as new things came up and down, they weren't afraid to call us. They were happy. They had that peace of mind that no matter what, they were taken care of.
And you did offer 3 levels, though.
Yes, we still offered 3 levels. You can still do that, a low, a medium, high. But once again, that focus was always at the end of the game. It's that peace of mind. No matter what happens, you're taken care of.
But then some accountants are going to say, oh, there's going to be the guy that's going to call me 80 times, at midnight. And it's like, I'm sure you're going to get some of those people, but then you get the people that never call you or call you twice, and it like makes up for it, right?
Well, and dare I say this, is that they actually don't. And they may initially. You know what was very big right now? You probably noticed in your neighborhoods, the subscription-based car washes.
Yes,
right?
I have that.
Okay,
Yes.
so this is like all over, and this
My
is because these organizations have been buying up these small car washes who were barely eking out existence, and have turned it into a subscription model, and are now making money hand over fist. And of course, the initial fear was, why didn't these smaller companies do this? Well, because they were afraid of, if you're on subscription, you're going to get your car washed every stupid day. Yeah. And you know what happens? Yep, you do, for about 3-4 days. And then you're like, yeah, I'm not going to do this again. Like, it gets old quick. And the same thing happens, what we find, with professional firms as well. Yes, there might be an initial influx of calls initially when it first starts happening. But over time, they get, I have access to you. The peace of mind kicks in.
Yeah, like for example, we offer emergency text access in our subscription or maintenance packages, and we never get emergency text messages, but people love that peace of mind that comes along with it.
It's that ultimate value add, and you can still do those value adds like you did in value pricing in the subscription pricing tiers. So some of those concepts, the fencing, it's still there. But yeah, Ed, to your point, like sometimes it does go bad. I mean, Moviepass is probably the best example. They have the subscription, watch as many movies as you want.
Great.
But it was too great. They found that people were going to more than like the 1.5 movies a month.
Right.
And they bankrupt.
Because that's the mistake that people make, is that thinking that subscription pricing, here's what subscription pricing is not. We know a lot of what subscription pricing is not, and it's not taking an annual price and dividing it by 12. It's not that at all. It's probably a significant increase into the overall monthly price. But then what you've got to constantly do is, Ron Baker and I like to talk about, what are you going to do to continue to plus your offering? Disney uses that term. Well, how do we plus this experience? And it's by doing things, by adding stuff in like text, an emergency text chat, that people perceive as valuable, that maybe they use infrequently, but in their mind creates additional value. And you've got to be constantly innovating and adding different things to it. So, Shayna, thoughts on that? Because I think you are way closer to subscription pricing than you think.
Well, yeah, perhaps. I know we really line out our services and our value pricing. I mean, it's lined out how many times you can call a month, that kind of thing, like without any extra, because we just want to know. We wanted to know what we were getting into with the client, and we wanted to be upfront. And we do the change order thing in the back of the engagement letter. If you change the service, if it needs changed, we don't rewrite the whole engagement letter. We have an appendix with an engagement change order, right? So it would be just adding a few extra simple things like your texting thing, because right now some of that texting can get out of control. But if I said to them specifically, hey, we offer that, But it's part of our subscription model pricing of this. Maybe that would be a really good thing because it would help channel that into a better system for us and for the client. I think that's a really good idea. I like that very much.
Thank you.
But how do you test and reevaluate, right? Like, because you might say, I think I got it. This is what it is, and I'm going to be patient. And I kind of feel like, investing in the stock market, you're like, be patient, be patient. And you're like, 1 year, I'm at a deficit. What do I do? So how do you not freak out? And do you only start with a handful of people and tell them I'm testing this out? Would you be my beta testers?
Yeah, this is. Go
Yeah,
ahead.
exactly like that. Of like, don't do everybody. Don't try and do subscription pricing to your whole firm tomorrow with everybody. Pick like 2 or 3 clients that you know really well, that you trust, that you can go to and say, listen, we're trying something different. We believe we need to change how we need to operate to better serve you. And here's our new model. Are you willing to listen? And you kind of give them the pitch. Here's how the new subscription pricing is going to work, pros and cons. Let me know what you think. And get their input. And you learn from that. They're going to say, yes, this is great. I like these 3 things. I don't like these 2. Get 3 on board. See how it goes for 6 months. Evaluate it. And then bring on another chunk. And you get comfortable, and then you can say, okay, now I'm ready to roll out like all my 1040s. I'm going to pivot to subscription pricing. Like, it might take you 2 years to get there. That's okay.
But you gain that confidence as you go, right? Just like when we switched from hourly billing to value pricing, you gain confidence with every single client that you applied out to.
Also, your clients changed over time too. You realize that, I would say, if there's somebody taking advantage of the subscription model, maybe they're not your client after a while. Do you? I mean, because you have the ability to say, you don't want to tell them, look, you ate way more roast beef than we thought you were going to eat on that buffet. So this isn't the place for you. But you do wonder about that. But nothing says that you can't finally just let a client go. And I've learned that with value pricing as well. My clients started to change who we had as clients, and I'm sure that would happen in the subscription model.
It might be a client you wanted to get rid of anyway, and it gives you a reason. Right?
Yeah.
But yeah, just like when you made that pivot to value billing, it was probably nervous that value pricing.
Value pricing.
That first time, like, you're a little nervous.
Sorry,
and like, no, we need to. Like, you're nervous about it, like, but you get better. And now you're both probably like, we're experts. Like, I'm not going to sweat it. I have no qualms about going in. Here's how we do it. And you're ready for it. It's
not
the
only
same
that,
thing.
there's always, I have found when we switched from hourly to value pricing that there are clients. I mean, there's a whole lot of fish out there, and so somebody's going to bite. And just because it isn't the person that had been a client of mine for a long time doesn't mean that the next person doesn't come in. That there's that fear that you're not going to fill the spots, but there are more people. There are more to be had.
And statistically, for like any product like purchasing, the early adopters, the first like 5 to 10% will buy almost anything that's new and interesting. And we all have those, and that 5 to 10% conversion is almost a guaranteed. So you're going to have 5 to 10% of your clients that'll buy almost any new thing. You'll sell them. You know who they are. Pick them. Learn from it.
Well, and we touched upon this at the last session a little. I don't know if you were watching it because the panelists were a little afraid to start talking about pricing when they knew you were in the building.
Wow.
But,
okay.
It's the old thing, like, people want certainty around what they're going to pay. And we said in any other profession or industry, okay, I'm going to go to the doctor, the visit's going to cost this much. The mechanic, before he does the work, is going to say, here's the estimate. We're just like, don't know. Could take you 10 hours, could take you 20. If I'm really good, it might only take me 10, and then I'm at a loss because I'm charging you by the hour, and then I got to figure it out, right?
Or they come to get their tax return, and then they get the surprise of, hey, you're getting a $200 refund, and I think my bill is going to be about $1,400.
Or 6 months later because you didn't have time to calculate what that was at the time. That's the worst feeling in the world.
Picture that being rolled into the emergency surgery, and the surgeon's like, never seen that before. It's like, how confident are you going to be in this surgeon? But accountants do it all the time. All the time. They call me up and they say, how am I supposed to give a price? They don't even know what they want. Well, price what you know.
And you see the look on their face when you tell them what you're charging them after you've done all this work, and it's like, it's always going to be disappointment.
Yeah, and I really don't like to disappoint people. It's also almost a character flaw actually too, because sometimes you have to disappoint people, but it really hurt. I don't like to see the hurt in their eyes, and I don't like to have that conflict. And so value pricing has taken that away from me. It's taken that stress away from me. From pricing up front just immediately, even our tax returns, everything, by saying this is the price and we have an engagement letter and you sign it, now I'm in the right. You know what I mean? And
Well,
I don't have to stress out about it anymore.
And there was stress that was mentioned on the opposite side, which is sometimes you write down your hours because you feel like, oh, they might not think it was worth 10 hours. I'll just say it was worth 8 or 7, and then you're
for time.
doing yourself a disservice, and then you're stressed out about that too.
Well, and that's the old conversation about utilization and realization rates, right? And that everybody lies on their timesheet, you know, not really, but staff
totally
does. You know?
Actually, they do.
Yeah.
Don't sugarcoat it.
But you know what I'm saying? When you're staff and you're like, oh my goodness, I worked from home on this and I did all this stuff and I can't let the partner know I did that. You know, that's a real thing. But you're don't want to say that you took that long because the guy before you lied on his timesheet.
Yeah.
And so it's a horrible just cycle of lying. And so it's helpful if you don't even think that way. It's just takes the stress off everybody.
Okay, we're going to pause there for our second CPE.
Actually, we're going to have a brief commercial break and hear a word from our sponsor, Sage. And when we come back, our second CPE code will appear on the screen for you. So don't go away.
Discover an easier way to manage business finances with our most advanced small business accounting software yet. We understand that getting paid on time is critical to the cash flow of every small business. And chasing late payments is time-consuming and awkward. That's why Sage Accounting makes it so easy to get paid, so you're less likely to have to ask twice. Take our easily customizable invoices, for instance. You can create professional invoices that best represent your brand. Just add your company logo, payment terms, and bank details. Built-in card payment support means you can quickly take payment details over the phone. Or you can add a Pay Now button so customers can pay instantly from their own device. So once you hit send, your customers instantly receive the invoice wherever they are and can pay using the method that's easiest for them and quicker for you. You can also track the progress of your invoices, so you always know where you stand with your customers and payments. And of course, being paid on time keeps your cash flow, not to mention your stress levels, healthy. With automated bookkeeping, Sage lets you focus on what matters most. And there's no need to worry about losing receipts either. You can just snap them on the go and upload them directly to Sage. And with Auto Entry by Sage, all the receipt information is automatically extracted, categorized, and posted to Sage Accounting with complete accuracy, so you won't have to manually enter data again. When it comes to banking, we support all the big names, as well as the new ones. So at no added cost, you can simply connect to your account, and your bank transactions will flow effortlessly and securely into Sage Accounting. With Smart Bank rules applied, Sage Accounting will automatically categorize incoming transactions for you. So those invoices you sent and receipts you captured are automatically matched to the corresponding payment as soon as it's received. And with just a click of a button, you can post straight to the ledger. This can reduce time spent on data input by 80%. Sage Accounting is built to flex around how you do business, as well as being able to access your books when and where you want. This means you can connect to other apps you need to run your business and ensure data flows between them, minimizing your data entry and ensuring accuracy. Our intuitive and interactive dashboards give you instant visibility of key information to help you make informed decisions. So, for example, you can always see your cash flow position and understand who you owe or who owes you. And with dozens of powerful reports at your fingertips, it's easy to identify trends and drill down into the details you need to make data-driven decisions, which ensures your business performs at its best. You can tailor reports specifically for your business, export them into a spreadsheet for further analysis, and easily share them with other members of your team. When doing tax returns, Sage Accounting lets you calculate, validate, and submit them with ease. And with the ability to invite your accountant and colleagues and manage their access rights, you can collaborate together more easily, securely, and in real time. With an inbuilt audit trail, you can keep track of every user's activity, so you have peace of mind that your books have been updated correctly. Plus, having all your receipts, invoices, and bank transactions in one place means the hard work is already done. As a result, you and your accountant can agree and submit your GST, HST returns in just a few clicks with the confidence that it's all up to date, accurate, and compliant. It's easy to get started, and we'll help you along the way. Our step-by-step in-product guidance gives you all the information you need, whatever your level of expertise. To find out more, visit sage.com today.
Welcome back. At the bottom of the screen, you are looking at the second CPE code for this session. So if you're planning on collecting CPE for your attendance today in this session, be sure to write down this code. And especially if you're drinking wine while you're taking the session, be sure to write it down and not just commit it to memory. All right, I believe, Alexandra, we have results from our poll.
We do. So 25% of people are pricing hourly, 20% are value pricing, 5% are subscription model. Maybe these are your friends, or the people that wrote the book.
Yeah.
And 48% are hybrid. I will also share, we love when comments like this come in from the audience. So someone wrote, I'm literally lying on my timesheet right now as I jot down my time from yesterday. So we're not making it up, boys and girls.
And we're not judging.
So, so just quickly on that, which is why we don't need timesheets, because nobody puts down on the timesheet what happened. They put on what they think should have happened, or, to your point, what their boss thinks should have happened. So that's what they put down on the timesheet. And so the thing is, well, we need to measure actual costs. It's not actual anything. It's optimal. If anything, it's optimal cost because it's what I think it should have been.
But it's closer than nothing at all.
That's right, because I'd rather be approximately right than exact precisely wrong. And that's and you're precisely wrong with a timesheet.
But
you're
here's
precisely
the thing.
wrong.
If you think you know what it should be, then just tell them up front what it should be.
Exactly.
Yeah, exactly.
Right?
Exactly.
So we did
exactly.
have a question.
Let's do subscription. It's much more fun.
Ed,
Too much tangent.
a question did come in that's related to this. The attendee said, we offer value pricing options. Is it possible to offer service options in a subscription model?
Without getting detailed into it, yes. I think the answer is overall yes. But what I'd like you to begin to think of is think of it instead of covered versus not covered. And this goes to and I know you use this term in your practice, concierge, and it's actually concierge medicine that has really come up with this notion that if we can do it, you are covered. If we can do it in our practice, you are covered. If we have to go outside, because there might be some things that are ancillary that's outside of us, then that's not covered, but we will either give you a referral, like a doctor would, to this particular specialist, or if you would like us to manage it, we will do that as well. So we will act as, for all intents and purposes, your general contractor. So this model is, again, very big in concierge medicine. It's also big with a home services group that is a franchise. And what they do is they do everything in your house that you can possibly. They come in, check your light bulbs. They recork around every place in your bathroom. They empty a half a gallon from your hot water heater every 6 months. Did you even know you had to do that? Because I didn't. Like, I didn't know this was the thing you were supposed to do, right? But there's this whole laundry list of stuff that they will do to keep your home in tip-top shape. But they will also then serve as a contractor if you want to put a deck on. Or if you want to, and about half of their revenue is from this subscription-based services to just take care of everything around your house, and about half of their revenue is acting as these general contractors in these areas where people want to do something to their home. And I think it's a brilliant model. If that's what people meant by hybrid, I very much agree. But the key is, what you can do inside should be covered by your price.
So I have a question then. So we have various size firms. We have tiny firms, which mine's, I'm not a sole proprietor, but I'm about as small as you can get without being one. And then you have larger firms. How do you see subscription pricing work for the smaller firms? Because if I think of it like doctors, for instance, you have a doctor who can check your heartbeat and see if you're breathing all right, but then you may have to add an MRI or a CAT scan, and maybe you need to add people in order to do that. So how do you see subscription price working for smaller versus larger?
Well, so let me use Dr. Paul Thomas as an example. And for those of you in Detroit, you want to look up Dr. Paul Thomas, Plum Health, DPC. So the baby brother of concierge medicine is called direct primary care. And it's a new phenomena in the medical practice where what folks are offering, these doctors are offering, is unlimited visits to us. They even do texting. They do remote. This guy, Paul Thomas, makes house calls, does that. So, and doesn't take insurance. There's no insurance. Now, what he's doing is he says, here's the list of stuff that's covered. So it's the stuff like you're saying, I can check your health, I can make sure that your cholesterol is but he constantly is adding services. So in the last year, for example, he added an X-ray machine. So he didn't have X-rays previous to that. So when somebody had a potential broken arm, he would say, no, that's not covered in our practice. So you need to go to the emergency room. But what he's looking at is, what can I add that can I now begin to cover? Sutures, all this kind of stuff. But if you want a plastic surgeon for your kid who's cut their face, he's not going to do that. He's just going to put the Frankenstein stitches on, right?
That's really interesting
Yeah.
because with tax planning, we have our in scope versus out of scope.
Right.
And so there's certain things that are pretty typical tax planning solutions that would be in scope of that concierge service that you're providing. And then there were COVID provisions that to me became out of scope in a way because it was a whole new knowledge base that you had to access to do it.
Right. And what Garrett did was effectively create a rider. Again,
Sure.
And that's why I use this insurance model as this, because again, insurance is pricing a risk pool, right? And that's the same thing that you're looking at doing here, is pricing a risk pool.
Yeah, and you're going to start with, hey, this is what I want to have it covered and not covered. And for your firm, you might say, listen, this is what we do really well. Tax notices, IRS audits, I don't want to do that. Okay, that's not going to be covered. You're just not going to get into that, but maybe you start to do more of it and it becomes covered. You
I
can
like
control
the terminology too, because the scope, it's what do you mean it's out of the scope? This is completely subjective what you're telling me here versus if you relate it to that.
Covered.
Yeah.
And
It's
I
a
think
great term.
It means that you really need to spend careful time creating your engagement letter, your description of your services. Spend time thinking of all the things that they might come to you for that you don't want to do or that it's outside your expertise, and make sure that you're protecting yourself by saying this is what the subscription is going to
with
cover.
his lawnscape analogy, if that existed, there'd be a list of services to make your house the best in the neighborhood, here's what we'll do.
Yeah.
But we're not going to do more. We're not going to put a new patio in. You're not going to get a new deck for the same price. We're not going to buy you you want a new tree? Sure, you can get a 6-inch tree. You're not going to get a 30-foot already grown tree. Once again, there's covered and uncovered.
Or maybe you can, but you'd want to identify.
Yeah, that might be that premium package. Premium package, yeah, I don't care what you want. You're paying $5,000 a month. You want a new deck this month? Sure. We'll tear the old one down. We'll give you a brand new deck.
So would subscription pricing be better the more you niche? The better the subscription pricing would be easier to do the more you niche into an industry.
I think so. And actually, jumping back, I wanted to make this point earlier, but we're going to the commercial break. I think this is, especially for larger firms, as you move to subscription, one of the things that you might want to consider is creating a separate brand for the subscription-based pricing, and it can be under the same roof, but you really want to, I think, separate out the brand as a differentiator, because a brand can only stand for one thing. And if what you want to do is say that this brand stands for subscription-based pricing, shift people over, and what you're saying is effectively compete with yourself. And over the course of time, the new brand will have a certain number of customers under that brand, or members, as I would like to say in there, that you can sell the other practice off.
Yeah. But back to what Gail said about being careful about what you put in the package from the beginning. Be careful, but don't have to be perfect to where you can't move forward, because it's going to evolve. There's going to be mistakes made. That's why it's important to do that kind of one at a time movement over to the new package offering and subscription offering.
Totally agree. And even hold back on certain things that are high premium, knowing in the next year or two, I will probably build this into my subscription.
Yes.
Because maybe you're not completely competent in that area and you want to develop further practice experience in it. So
And we were talking about this over the break of, as accountants, we all feel like, I want to do more, I want to do more, I want to do more. Like, this allows you to set that level up front and, like, stick to it. Like, you got to be good about sticking to, here's what I'm going to do. I'm going to do this much. And telling everyone in the firm, like, this is our level. We've all agreed to, like, this. Stop trying to do this. That's not in our agreement. And we've got to be okay and comfortable. It's hard as accountants. I hear that a lot. Like, I just want to, like, do a better job. I want to make them happier. Well, I know you do, and that's okay, but, like, that's not what you agreed to. Like, you've agreed to this.
Right.
And if they want that, they need to pay you for that.
Yeah, two thoughts. One, I think accountants have a hard time. You know how dentists have dentists and orthodontists and prosthodontists and endodontists and periodontists and all the dentists. You know, there's so many, and we get afraid to say, and it's an industry thing, we really need to think about it with our peers. We get afraid to say, look, I really don't like IRS resolution, and that's because I really don't like IRS resolution. And I mean, if I do the work, I'm okay, but don't come to me, not my client, and think I'm going to do IRS. It's just not something I like. I don't like to argue with the IRS. I don't want to make that call. I'm just not pushy enough. And so we need to be okay saying, would you like to do the IRS resolution? You know, can we work together? Will you not steal my tax client, though, and would you like to do the IRS resolution? And be okay talking to each other about sending, you know, somebody over, because my dentist never has a problem sending my child to an orthodontist, you know, and I don't know why we have those issues. So I think maybe if we were doing the kind of pricing we're talking about, we'd feel a little more secure in what we were doing and going outside scope. And then the second thing is something that Alexandra and I were talking about, and that was when you were talking about doing a little more and a little more. And I've owned a restaurant with a bar, and I also own a CPA firm. And one of the things I realize sometimes is that staff can overpour, like bartenders do. And so if you are giving a service and you have a little extra time on your hands, so you're just going to go ahead and check their, if we're doing accounting, you're going to go ahead and do their bank reconciliation every day, like every minute you have a chance, you know, because you have a little extra time, and it's fantastic, and you're caught up. But the client thinks that that is now normal. You've overpoured, when that could be a scale up in service and more pricing, and that's or you know, you're suddenly doing a bunch of tax planning that they didn't really pay for tax planning. They paid for a tax return, and you should have. You know, tax planning gets complicated, and you just kind of fired it off and gave it to them, and you overpoured. And I think that's what you're talking about, doing more and more and more.
There's actually a technical term for that. It's called scope seep. S-E-E-P,
That's right.
as opposed to scope creep.
And then you said on the flip side is then when you give them, or someone else on your staff gives them, the regular amount of service that they're paying for, they're like, oh, this is a watered down product. And you're like, no, this is actually what you normally pay for. We've just been putting a few extra shots in there for that because we like it.
Because then when we get really busy and we don't have time to do that daily thing anymore that we were doing in the overpouring part or scope seep part of that, then the client's disappointed because they think that that was what they were supposed to be getting, and it's not at all what they were supposed to get. It's just that we gave them too much.
But just a point with subscription, that goes away because scope no longer becomes a problem. Is covered, not covered, and I think the language change is really important there. I mean, we talked about this at our session last year about the fact that we have to change the language sometimes in order to change what happens in the organization. So. Moving away, Alexandra, from the term scope toward covered, not covered.
We do have several audience questions. Do we have time, Gail?
Let's do it.
Okay. First, how is subscription pricing different than the old monthly account fee for services?
Good question, and I would say that the difference is that it's probably at a higher price point because with the old services, what you're paying for is that particular service. That's the difference again between paying for output versus an outcome. So with subscription, there's really more to it than just the quote services that you were doing in the past. There's access, there's all of the other things that your firm is doing. Think of it this way: people are subscribing to your firm, not to a list of services.
Got it. Okay. Next, how do you and this is very timely actually. For anyone who's deciding to change their model after they've seen this session. How do you begin subscription pricing in January when you're about to begin a tax return and they have only paid you for 1 month?
I would go to Garrett on that one.
I mean, that's a good time. Okay, if they only pay you for 1 month in January, do it now and get started. Like, think it through. Pick just 10. Don't do all your 1040s. Pick 10 and try something out. How can you provide a 1040 subscription service to your firm? Provide access, provide resources. What are the services you want to offer and do? Because it sounds like your offices you may offer and yours are vastly different. And the subscription pricing model will be very different on both sides. There's no one size fits all. What services do you want to highlight and offer? What do you want to highlight and offer? And then see how the successes go. Get that client feedback. But find what's going to fit for your firm. And it's almost like your niche is just like the clients you serve and the services you provide.
I think that's a timely question for me because I saw on Twitter, of all things, and tax Twitter's fantastic. If you're not there, you should go. So a certain user on tax Twitter say, I decided to give a subscription price. Now, this is slightly different than what we're talking about because it's on a smaller level. For just random questions. You know, do people want to ask me questions all the time, and I don't want to bill them for every 6 minutes on their questions. So I just said, hey, you know, he didn't give the price, but I'm just going to randomly throw out a low number. You know, for $50 a month, an extra $600 a year, or $100, I don't know, maybe you want to charge $200 a month, you can call and ask me questions. And as long as I can answer them without research, it's unlimited. Just call and ask me, because quite frankly, clients do it anyway. They call and ask questions, and then they don't think you're going to bill for them.
Well,
but he can start that service January anyway. As soon as you say I'm going to do the tax return, would you like to throw in the whole audit insurance things, which people do, and or the telephone calls right then? I can see that
I
being
bet people would pay for that because it gives them, because they're afraid to pick up that phone, right?
Bingo.
Exactly. So then if I throw that in, now I'm just trying to think of the price. After reading his tweet, I was like, whoa, you know, epiphany. How do I want to price that? But I'm going to price it across the board to every client. And I've got some complicated clients and some easy clients, but I just want one price,
That's
a
right.
subscription
One price across
And
the
I
board.
like that as long as I don't have to do research, because then that's extra time versus I can just spout out that answer.
That's a covered versus uncovered
Right.
conversation,
Right.
right? So it's like this is covered, this is not covered. It's part of, you know, and there might be some question as to, well, you're just saying that you need to do research and you don't. Well, if you don't trust me, you shouldn't be entering into a business relationship with me anyway, right? So,
Oh, go ahead.
yeah.
I was just going to jump in real quickly. For those who don't know what tax Twitter is the hashtag on Twitter.
Yes,
So yeah, so it's not like a separate Twitter, but
Right.
Okay.
Sorry.
I do have a couple more questions.
Yeah.
Can we keep going here? Does subscription pricing use a menu approach like you see in value pricing? I'll give that to Garrett because you were saying, you know, platinum and gold and all that.
Yeah, I mean, you can still have those tiers of options because Shayna was thinking for you, like, if you move to subscription pricing, your lowest tier could be, you're still going to pay, the non-covered is calling with questions. Okay, then the middle package, covered is all those questions. And you're just going to build it in there to one bigger piece. But you got to decide as a firm, like, what are your services? What are your offerings? What do you want to put in there? Because, yeah, you might not want to combine, like, listen, for your business client, we'll do audit review / compilation, tax return, tax planning, personal return. Here's everything on our website, all like 500 services. Sure, I'm going to cram it all in there for like $4 or $5 grand a month. Like, that might not make sense. There's some stuff you might not want to bundle all in there because it's just too much stuff. You're not conveying the right amount of value with that. It's just stuff.
Yeah, we interviewed on our radio show, and when I say me, myself, and Ron Baker, this guy Jody Grundon, who's got a practice called
Jody,
Summit CPA,
great, yeah.
right? So he's doing a lot of this now. Here's some fascinating things about Jody. One, his price is weekly.
Yep.
Weekly, not monthly. Weekly.
Is that because it's lower? They say?
Oh, no.
I mean, not that he's charging less, but they're perceiving it less?
His minimum price is $750 a week, I believe.
Wow.
Yeah, their average client's somewhere around like $80,000 a year.
Yep. And
They
yeah,
do outsource CFO services,
Yep.
though.
Correct.
Yeah, but if you go, he's got the full menu, what's included, what's not included. He does have a lot of like, and this is add-on, this is add-on. I'm not a particular fan of that. I'd rather see him expand it. But he told this great story when we interviewed him. He said, Mondays used to be my most hated day of the week. I used to hate Mondays because it was drudgery to go into the office. He goes, now Mondays are my favorite day because the first thing I do is check my bank account and there's a big pile of money every Monday. in the bank account. So yeah.
So here's another question. Oh, sorry.
Yep.
Yeah. Oh,
Go ahead.
I was just going to jump in the issue that you mentioned about it, there being, I think it's a valid accountant fear that, well, I'm going to charge someone so much a month for a year, but they come in January and I do their tax return and they've paid me for 1 month and then they disappear. So
Yeah.
I think so. I mean, do you set up a valid contract that
No.
they're committed to, or you just?
And we were talking about this in the green room, actually. One of the things I think that is important from a subscription model perspective is frictionless. And you alluded to this earlier, Garrett, right? This notion, easy in, easy out. Yes, it's a risk. It absolutely is a risk. And if you are questioning whether or not this particular customer is going to do that to you, don't engage with them anyway.
Are you
right?
saying not to auto draft based on your
No,
engagement
you
letter?
can do, no.
No, you can auto draft, but
I'm
not to
saying don't
capture
enter into this long-term contract.
yeah,
You must stay with us for
definitely.
at least X number, or
Okay.
we were talking about specifically onboarding fee. I've seen it work. It certainly works in your case. I think I'm not completely anti. I just think that it would be better if as frictionless as we can make it.
Gotcha.
And getting back to the Netflix example, I don't know if you saw this, but about 6 months ago, Netflix canceled. I think over 100,000 customers that they had who were not using their service. They just outright said, "You have not used us. We're stopping charging you."
Oh,
Because at the end of the
Good
day,
for them.
Before we continue, we do have another CPE.
Yeah, we're just going to post the third CPE code on the screen. This is your third code for this session. That doesn't mean you can leave.
We got a few more minutes of good material.
Please
They're on
record
the
this.
honor system
Yeah,
now.
exactly.
All
we
right.
promised to make this more exciting in the last little bit to like really keep
Yeah.
it going.
Yes, we're going to have the answer to everything.
So
Yes.
Garrett, the spotlight's on you because I cut you off, and I'm sorry. If you remember what you were about to say before I.
Now that's really hard to think about. What was I about to say on
Well,
that?
okay, well, while he's thinking,
There you
I
go.
have to go back to the implementation or onboarding fee because that is my workaround to whether we like it or not, tax deadlines are tax deadlines, and we have certain dates of the year that we have to abide by. And so if you're taking someone on where you feel like their return would be prepared within the next couple of months, I increase that implementation fee for the coverage. Not because I think they're going to leave, but just because I want to make sure that it's covered in that initial implementation.
The one-time fee
The
to start
one-time
with.
fee,
Okay.
right?
Yeah.
And then if it's 8 or 9 months away, I know that my maintenance fee or my subscription pricing or fee would take care of it later on. Or price, sorry.
Yeah, no, that's fine.
Not fee, price.
Not fee. Yeah, and that's what things. None of us like fees, right? Anybody here like fees?
Nobody likes
Nobody
The
likes
other
fees.
firms like fees.
They like it. We don't. So, but you know, there's math behind this, and I think we talked a little bit about this. But this notion of, well, if you're spreading it across a risk pool, that's what makes the difference, right? And if you can command a premium, which you can for easy on, easy off, then what you're saying is all of your customers across the board are going to be paying a higher price,
Right.
and therefore the monthly or the concern about the onboarding fee is less and less.
I do have a couple
Yeah.
more. We have time for a couple more questions. As you add services each year, do you increase the subscription price accordingly?
I would say not for the services. I think you can increase prices over time, but it should not be specifically tied to the other services. So, for example, going back to Netflix, when the new season of Ozark drops, they didn't increase my price. Right. But what they will do is over time they're going to have an increase to the price, but they're not going to say this is because programming has become more expensive.
Yeah.
I don't like, and none of us like this, by the way, tying price increases to costs. None of us like that. Like when you hear, well,
What's
we're
happening all the time right now? Like, oh, because the supply chain,
Blah,
we have
blah,
to,
blah, but we have to-
we
Yeah,
can't
but I don't
get
wanna
our
hear
rice,
about
so
it.
my Chinese food price is going to go up because they have to get the rice from somewhere else. I don't know.
That's not my job to worry about your prices, your
Yeah.
costs.
Yeah.
That annoys me
Yeah.
actually too.
Okay, another question. When do you have them sign the engagement agreement if they are on a subscription model? That's like the updated terms of service.
Yeah,
Like
it's an
anything,
update.
It's like before you start. Like that's
Yeah.
the whole shift here, even with value pricing. Like, okay, we're going to onboard. It's not. I'm going to do your tax return, and I'm still going to bill you later. It's okay. Before we start, you're going to sign this proposal, whether it's value price or subscription. We're all on board. We're signed up. We're ready to go. We're committed. I'm not truthful in believing that you're going to come still want to do this or pay us in 6, 12 months and there's no contract and it becomes a legal mess. Like.
All right, and I know we're running out of time, and I want to throw this one in because we've talked a lot about existing clients, and this one is a little bit of a different question. How do you suggest billing for cleanup work when accepting a new client before implementing a monthly recurring fee subscription model?
I think that's similar to the onboarding question.
Okay.
Is like I would try to build that in across the board, and the term in moving to subscription is called swallowing the fish, because if you draw out the costs and revenues, there's a dip to revenue and there's an increase to cost along that spectrum, and over the time, and it's usually a 12 to 18 month period. that gets covered. And once you have the price increase across the board, it's no longer a concern on an individual basis. And I just want to make one quick point. In subscription, cost of goods sold, so whatever you do to your services, are future directed. In subscription, we absolutely do not want to line up revenues and cost in any way. We don't want to do it at all.
Because there's time differential now
that's right.
between it.
On purpose, we're putting that on purpose, and cost of goods sold are future directed. It's directed toward the future. So think of it that way. Begin to think of revenue like we used to think of inventory, with a beginning and ending.
But also on like the cleanup issue, like, just think about it. If you got a new client and you got to do like 4 years of cleanup, well, you can't then spread that out over like 18 months and have it stay there because the number's too big. So in that case, if you're doing 4 years of cleanup, you might want to price separately, like, here's the 4 years of cleanup and here's the new price. If the differential is too big because it's going to be like $500 a month ongoing, but it's like, it's that bad. It's like 30 grand to clean it up because like they have no records.
Again, you're thinking in terms of this individual customer, not the portfolio. And if you're thinking in terms of portfolio, it doesn't matter. Yeah. It honestly does not matter over the course of the portfolio.
And that's like where you said, volume matters there, right? Yeah. You do need to have some volume.
And that's the fish. And that's the fish. Because it is a timing thing. I'm not going to deny it. And if you look at the organizations that did this, including Adobe, by the way, when they switched to a subscription model, that they told their investors, hey, listen, we're gonna have this revenue challenge. We know we're gonna have it. And yes, Wall Street killed them for about 12 months, but now their stock is through the roof.
But like with that, like if your firm's niche was like, we clean up messy clients, and that's just built into it, you're built to handle that. Once again, that's a good fit for you. For your firm's like, we're really good at taxes or tax planning. Yeah. And this is a business client that needs 4 years of cleanup from ground zero. Okay, that might not be the best fit for you anyways, because it's not what you're built to do and handle.
That's true.
And to smooth out those costs, it's not your focus.
If that's not your focus, it's a different revenue piece, right? So, but look, I am suggesting here that what we're looking at doing is really focusing on the long-term relationship. And if I'm cleaning up a mess and that's totally transactional, that doesn't make me happy as a provider. I want a long-term relationship with someone.
Okay, and as future evidence that subscription pricing is A, not something that Ed Kless made up, or B, not something that we're just discussing in this circle, you were mentioning the other day that software companies are actually moving to, accounting software companies are moving their product in such a way so that they are working with accountants who are charging using this model.
Oh yeah, more and more what we're seeing at Sage is people moving away from doing their own accounting in-house and outsourcing it completely. I mean, and I think that's going to be the case. There's a flood of customers going into the business process automation, whatever you want to call it, advisory.
And what are they doing specifically with their product?
From the product perspective, making it more so that it's cheaper for the customer. Okay. Right, and we're spreading that risk pool across the accountants who are doing, and bookkeepers and all of that stuff who are doing the work.
Nice.
Right. So. And
one other point I wanted to make, which isn't my point at all, you wanted to say something about this wine?
I subscribed. This is Wilson. I'm a subscriber, happy subscriber. But if you think about it, for the longest time, if you were a member of a winery, that you are on a subscription, right? They send me X number of bottles every couple of months or whatever it is, but I also then get certain benefits, include preferred pricing and shipping and all of these things. So this is again and this is an excellent place for Zinfandel's Wilson Winery. So just put that out there. I don't have stock, but it's just one of my favorites.
But you can really almost subscribe to almost anything. If we really think about it, we come up with a subscription
I told the story in the group. I'm now subscribed to a vacuum cleaner.
See?
I am.
Like you rent it once a month?
No. iRobot and I subscribe to the vacuum cleaner. It's $30 a month. We call it the guy in our house. The guy comes along and does the downstairs. He's broken up in two halves. Monday, Wednesdays, and Fridays he does one. Tuesdays, Thursdays, and Saturdays he does the other. The little robot comes around, cleans everything up, goes back to his base station. The base station fills into another bag. They have everything in place so that when the parts need replacing, they just send it to me. The bag needs replacing, they just send it to me. So, but here's the thing. I'm not subscribed to a vacuum cleaner. I'm subscribed to clean floors.
Mm-hmm. Yeah. Nice.
right? So.
All right, we are about to wrap this up, and I don't mean just this panel, but I mean Ensuring Success
Everything.
2021. We're about at the end of the day. I have just a few, this is where we roll the credits. I have just a few things I want to mention. We have the staff that is behind us, both in this room, around us in this room, and outside this room is huge, and I want to make sure that we give some acknowledgement to at least this handful of people who are closely involved in making this an event that you, I hope, enjoyed and will want to return to in the future. This is an annual event. On the CPA Practice Advisor side, first of all, Isaac O'Bannon, Managing Editor, is handling our social media. Barry Strobel is our publisher. Alexandra DeFelice, co-moderator, could not do these sessions without her. Judy Corey is our marketing manager. Nick Phillips is handling the tech feed out to the site. And then on the AMS Pictures side, which is where we're broadcasting from, we're surrounded by a lot of people. You don't see any of them. The group that's working with us includes Margaret Starnes, Brett Harrell, Tim Wiley, Hunter Harrington, Randy Patrick, Forrest Eleuteris, Heather Knox, Randy McDaniel, Andrew Rye, Jeff Bungfelt, Kyle Thomas, Eric Smith, Shavella Stevens, and Belynn Parks. We could not do this without any of those. I mean, we need every one of those people in order to pull this off. It's been a great year. We want to thank Sage for sponsoring this session. We want to thank all of our sponsors for making this event possible, and AMS Pictures for hosting us once again. I think we're going to show the sponsors up again on the screen just briefly so you can see who they are.
Gail, you forgot the most important person, though.
I'm sorry.
The traffic.
No, Gail Perry.
Also, and you're right, we forgot our traffic managers,
Yes.
Garrett and Aaron Burson, who've been running people around and making sure all our speakers are in the right place at
And
the
you
right
can
time.
subscribe to my service next time.
And all of our panelists, we had a great bunch of people. I mean, we've been doing this for so many
So
years,
good,
and
yeah.
the panelists just keep getting better and better and
Yeah.
return for more. So
Exactly. Yeah.
here's to
We'd
another
love
year.
your feedback either on Twitter, #DecemberCPE, or you can click that button on your screen and still send messages to us, or just email us, whatever. We'd love to hear from you again. Thank you, everyone, and I think we're out.
It's a wrap.
All right.
go.
Thank you.